And we are live. It is hashtag Friday Pie Day. Everybody knows what day it is. It's the Wolfer briefing. Everything Wolfer. We're going to talk about it today. We're going to talk about what's going on in the markets. We're going to talk about why the markets are going down. Actually, and what's funny is the market literally just pumped like right before we started this stream. Went from like 93.8 all the way up to like 95.8, which is, that's a good pump. But if you watched my stream earlier at 11 a.m., you know that we just hit massive walls of resistance at that point. And I'm pretty sure I probably got my short positions filled at like 95 and 95.8. So anyways, here's my point. We have some things to discuss. All right. We have some things to discuss for Wolfer. We have some things to discuss, just overarching market and stuff like that. I'm going to go ahead and start the track because I now know how to play music on this so that it's not boring for people. So let me know in the comments section if the music is too loud. I learned from the last stream where the music level should be. So this should be good as long as you can hear the music a little bit, but you can also hear me. That's what we're shooting for. Okay. So just let me know in the comment section. Let me know that you're here, man. Give me something in the comment section. Smash the like button. Obviously hit subscribe. Boom. Bang on the notification bell. Man, give me something in the comments section. Let's get rowdy. Let's talk everything Bitcoin. Let's talk everything markets. Let's talk everything Wolfer, right? And then let's see where this is all going to take us. So if anybody could let me know in the comment section if the music is working and if it's okay. I cannot hear the music myself, which sucks, but it is what it is. I'll figure out how to do that. I don't care if I can hear the music as so long as you guys can too. Or so long as you guys can. So with all that being said, we've got Nicholas Gonzalez in the comment section. He's saying, let's effing go, baby. We've got Duck Rules, which is Paul D in the Discord. This dude's a legend. He's saying go Wolfers. Yeah, dude, absolutely. Go Wolfers. Go Bitcoin. Go tad bit loud. Okay, let me turn it down. Let's see if we can turn it down a little bit. All right, let me know if this is a little bit better. So long as you can hear me, everything should be good to go. So with all that being said, let's get into some of the stuff that I think I'm seeing in the market first and foremost, where it's not looking great for Bitcoin right now. And that means, it's not looking great for the Wolfer portfolio of altcoins, but, we're long-term. We've been, in these positions for a very long time, master and validator, noting and things of that sort. So we're going to talk about exactly where I see the market going, where we could see the catch point, and then where it bottoms out, and then where we could see the catch point as to it going up. And that's where we start talking about what's our exit strategy, and then where do we go as Wolfers from there. Okay. So the first kind of concerning thing, and I'll give you guys a little bit of update on Burrow Core too. Since people keep asking about it, whether it's in the Discord or in the comments section or whatever, I'm not going to do a full video on Burrow Core. I'm just going to be honest with you. I'm not doing it. I don't care that much, honestly, about it. I don't care enough to drop an entire video on it, do a bunch of, blah, 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 script it up, do all the filming, get all the editing. It's just not worth it. We had like 1/25 of our portfolio in that. It is what it is, man. They're either going to pull it off or they're not going to pull it off. And, that's the way I'm looking at it. So basically what stream just basically went down, but I think everything else looks like it's back up. So the first thing that I'm seeing is this right here. Okay. And this is what could be, potentially concerning. All right. But we'll talk about it. In any case, we'll talk about it. Let's get a baby Drew on the screen. We did just receive, the U.S. court just received the green light to sell $6.5 billion in Seized Silk Road Bitcoin. Now, could this be a false flag, right? It does not ensure immediate liquidation of the seized Bitcoin, as federal asset forfeiture requires several administrative processes, right? So they can't just go and sell this, basically. Now, here's the thing about this, okay? Like a $6.5 billion liquidation of Bitcoin. Let me scroll back in the chart and I'll show you. that was like this right here. That's like what this candle did. Okay. This is like a $6.5 billion liquidation candle. Over here, when we saw this massive crash, I think it was on like I think it was in like just a few minutes. I believe it was right here. I think it was this candle right here. This was like a couple of billion in liquidation. Okay. So my point is we went from basically 105. Let me make sure that was the place. Yeah, I think that was it. Where we went from like 105 all the way down to about 102.5. So like that was $2,000 in Bitcoin price in that liquidation. So, I mean, could you see like a $6,000 price discrepancy in Bitcoin if they were to just like dump all of that one day? Yeah, you could see that. I mean, you could see Bitcoin come down here to like, I don't know, $89,000 if they were to just dump it tomorrow. Here's the problem. If they were to dump that amount of Bitcoin, like, it'll freak everybody out unless it's a super planned event where they're like, hey, we're dumping it at this day at this time and blah, 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 which they'll never do. My point is that it'll freak the market out and then it'll continue further downward, right? So whenever you see something like this, it's literally almost 70,000 Bitcoin, right? Which is over $6 billion right now. So is that concerning? Yes. Is it concerning, especially when we're in like, if we look at the 4-hour chart, when we're in a downtrend? Yeah, it's very concerning, right? Like you've got a falling wedge pattern that's happening right now on Bitcoin where price is trending downwards on its lower lows, and then it's trending downwards on lower highs, right? And your catch point is probably somewhere here in the $100,000 range. So your best case scenario when they liquidate this money is that we have pumped up here to about 100K, and then we see about a 10% retrace back down to like 90. Like that's the best case scenario. Worst case scenario is we roll over here, we come here like, a couple of weeks from now, and then that pushes us down to, $84,000, right? Or even further than that potentially. This is my catch point of Bitcoin in any case, about the $80,000 range to bring us back up past all-time highs, right? So that's what I see as the most likely scenario. I know that people, if you're watching my streams, I don't like put these things up there to like freak people out, like this head and shoulders that says we could go all the way down here to 75K. This is the line in the sand. If we go under 74, 75K and we hold and we bearishly back test it and we're going to like bull run's over. Okay. Do I think the bull run's over? No, I don't. I honestly think this is our catch point, 80K, maybe even 79, 79.5 to the 78 range right here, 78.5, 79, right? And $1,500. So my point is that what's the most likely scenarios that we come down here, we catch, we blast upwards, and we go to exactly where it is that I've been talking about for quite a while, which is these levels on my I don't think I have those levels, but anyways, the levels at about 120. Okay. So what do we need to really see in order for our portfolio to do extremely well? In my opinion, it's all going to come down to ETH. This ETH is going to determine the market. Bitcoin's going to determine the market for sure, right? But ETH is really going to determine the market in terms of like, are altcoins going to pump? Is everybody's portfolio is going to go crazy? Blah, blah, blah. Good news is that ETH is in a cup and handle pattern, and it has not broken out of that, the handle of that cup and handle, right? So that's giving us a price target on ETH of about, I don't know, anywhere from about $4,700. And if you know the $4,700 range, that's just shy of the previous all-time high of literally, I think it was like 4,850. It should be just right over here. Sorry, you gotta give me a second. Yeah, this might take a while. Let's just go to the daily chart and should be able to pull up. Yeah, 4,800, 4,850, call it $4,900. So like this is where we would be breaking market structure up here and setting like higher highs, right? Even here we set a higher high. So if we set a higher low here, we could be going right back up here, breaking market structure to the upside. In my opinion, what we need to see is we have to see ETH going up. This is what's going to determine the general direction of the rest of the market. It's not going to be Bitcoin. It's never Bitcoin. Bitcoin kicks off ETH. ETH kicks off everything else, right? So whenever we're looking at where do we want the market to continue pumping, ETH's got to take out that all-time high at 4,900. It's got to go above 5K, hold it, and then start trending upwards, right? That's when you're going to see all these altcoins like Avalanche starting to move up to their, like their all-time highs and things of that sort. So whenever we're looking at Avalanche, right, this is what I want people to understand. It's also got the same type of cup and handle pattern, right? We look over here. Let me get to the, yeah, things always, here we go. So as you can see, Avalanche has the same exact type of cup and handle pattern, cup, handle, boom. And we still haven't this is a really bad handle and we are in a downtrend, but you're talking 120 or 135 is the high on Avalanche. And so we've got work to do to get there. And so do all of the altcoins besides essentially ETH. Even Solana, right, has some serious work to do to get back up to its all-time highs. So my point is that boom. This right here, this is what's going to determine where we start taking profits on validator and master, right? If ETH breaks above that 5K level and holds, that's when it's altcoin season, in my opinion. That's when I've always seen altcoin season kick off. It's not when Bitcoin hits new all-time highs, because if that was the case, we'd already be, all the altcoins would just be absolutely just going bonkers right now, right? And they would have been. But none of them actually even reached close to their all-time highs except for ETH, right? If you go and look, like when Bitcoin went to its all-time high at 108, that was right here, right? Avalanche went to $55, $56. That's like less than half of its all-time high at 135, right? Then you've got the FTMs, right, which is now going to be Sonic. That's the other main driver of our portfolio, at least. And I mean, that thing, let's see what I think FTM did somewhat decently, to be honest with you. Let's just look at the Kraken chart. FTM went up to like $1.50, which was like half of its all-time high, right? Its all-time high is at like $3.20 or $3.30, something like that. So now it's rebranded to Sonic, and we're sitting down here at about 67 cents, 69 cents, something like that, right? So we really need to see ETH kind of kick off and get above its all-time high to then coerce these to get up closer to their all-time highs, right? So the way that I'm thinking about the markets and how they're going to kind of play out, right, is I understand it's going to be all eyes on Bitcoin. It's always going to be all eyes on Bitcoin, right? That's what everybody looks at. Everybody looks at that as Bitcoin is going to be the market driver and the thing that essentially determines everything that we're looking at, right? Yeah, exactly. Yeah, there's a process to the people, the government selling the assets at like these, the $6.5 billion worth of Bitcoin. There's an entire process. I do not think this at all. I do not think this at all. The low is not in. We are consistently setting lower lows, and I can prove that to you on the charts. If you watch any of my live streams, we are consistently setting lower lows. We are breaking market structure. We are literally in a downtrend right now. We are taking false bottoms and then pumping from them and then setting new bottoms. We are literally seeing volume fall off whenever the pumps are coming. You're seeing relatively small candles in terms of volume candles for pumps as it pertains to comparatively to dumps, right? The dump candles are massive. The pump candles are like, you got to have like 7 in a row. I'll give you an extremely good example of it right here. Okay. And I mean, I 100% do not think the bottom is in, my friend. As much as I wish that it was, yeah, I just don't think it is, right? So I'm gonna show you. Let me get it up on the what's it called? And take it off of the background. Bing, boom. Okay. So here's why I don't think the bottom is in, right? And this is just my bias, but I mean, if you're watching my streams, dude, I've been hitting the marks pretty consistently lately. We have this I mean, let's be real. Falling wedge, man. Falling wedge. Now, do falling wedges usually break up? Yes. But is this like a super strong falling wedge right here? This right here? No. This is just a downward trending support, right? If we lose this level right here, this is the value area low, right? We've already pierced through it twice. You don't want to see pierces through it. What you want to see is touches and kisses right here. Is pierce to a lower low, pierce to a lower low, right? So moving averages in an extremely bearish formation, right? You've got the 50 under the 200, the 100s under the 50, the 50s curling down. So long as we stay down here, like, it's not looking good. So I don't think that the bottom in it is in at all. I think that the bottom is somewhere around here. Okay. And that's my thesis. That's what I'm going to stick to, because I've been taking trades based upon this and based upon this analysis. So I'm going to show you exactly what I mean by that. If you go to the hourly chart, like, look at this pump that we had, right? It was 14 straight green candles, right? 14 straight green candles. But those 14 straight green candles couldn't even take out this high, right? This candle did, which was great. But look at the volume on these candles. This is the volume down here comparatively to the red candles. This one doji red candle right here, right? And look at the volume. All these candles combined are like the same volume on this one candle, right? This is 14 straight green candles. They're all small. And then look at this big dump red candle that just bearishly engulfs all of that stuff, right? You've got a massive, massive selling volume on these two, right? That almost the entirety of these 14 candles volumes combined is like as big as this one candle, or this one candle right here. This bearish engulfing candle, literally by itself, bearishly engulfed, let's see, 1, 2, 3, 4, 5, 6 candles. So 1 hourly bearish candle engulfed 6 other candles just from its open to its close. If you take from its open to its close, the whole range, it bearishly engulfed 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 10 full candles, right? 1 hour. So that's why I'm saying, like, the buying volume is not supporting your thesis, what you're saying, as it pertains and compares to the selling volume that we are seeing on Bitcoin as it sits right now. Now, can that change? Yes, it can change. Is it favoring a change of that? No. Yeah, I just don't see it, man. I don't see the bottom being in right now. Also, when we're seeing the S&P rolling over hard, right? And we're seeing it having a super rounded top right now, just from a technical perspective. And we've got the inauguration coming up. No president wants to come in at all-time highs, man, because, like, how do you do better, right? You come in at all-time highs, you have to end your presidency at all-time highs, at new all-time highs, right? Does it look good, right? No, it doesn't. So that's kind of my point. I don't necessarily think that the bleeding is over per se. I do think that there is a catch point. And I think that catch point is in the $80,000 to $85,000 range, because there are two catch points. One is at 84 to 85K. The other is at around 79 to 82, right? Depending on how quick you get down on these wicks and stuff like that, right? So that's kind of what I'm seeing. In terms of the Wolfer portfolio, right? We are obviously essentially sitting, on our hands, letting the validators and the masternodes do what they do. But also at the same time, we are planning that liquidation plan, that exit plan, right? Which is where we're going to say, okay, so take this into your own portfolio as well, if you happen to give it F, if you want to, right? If you don't, whatever. This is what we're doing. So we're aiming for a certain portfolio worth, right? So think of it as like market cap, right? Some people look at candlestick charts. Some people just look at market cap, right? Some people look at price charts. Some people look at market cap charts. Think of price being like, okay, FTM's at 70 cents. But think of like market cap being, okay, all of our FTM is worth $1 million or whatever it is, right? There is a point where, okay, and I'm going to give you some specific examples. I'm not saying this is exactly what we're going to do, because obviously we have to let the market determine that, and we have to understand whether the market is even going to hit that or if it's going to continue after that or anything, right? But I'm going to give you a high-level overview of the exit strategy that for free game, right? I'm not even charging you for it. you can take this into your own portfolio for liquidation purposes, right? So here's my point. Say that our first liquidation scenario is like, okay, we want to liquidate 1/3 of our portfolio at $6 million worth. That's what the entire portfolio is worth, $6 million, right? So we liquidate 33%, and then guess what that gives us? 2 mil, which is after all, rescissions, tenders, buyback offers, and stuff like that. That is essentially what we brought in, right? 2 mil. So we secure that entire bag, right? And say, okay, our entire portfolio is secure right now in cash, done. You leave the rest of the 67% on in those positions, right? And then you say, okay, once we reach 7 mil, right? Once we reach what would have been a $7 million total worth portfolio, you take 25% off again, right? So you take 25% of that 67% off now, right? At 7 mil. Then you set your stop loss for all of the rest of your orders, all of the rest of your assets at that $6 million valuation, right? So now you're guaranteed at least a $6 million valuation on all of your assets. Secondarily, if it reaches an $8 million valuation, you take 25% off yet again, and then you set your stop loss on that to the $7 million valuation. So now you're guaranteed at least a $7 million valuation. Then at 9 mil, if it reaches there, you take another 25% of that 67% off there, and you set your stop loss at 8 mil, right? At the 8 mil valuation. And then for the last 25% of that 67% that is left over, you can either 1, let it ride with a super tight stop loss, or 2, you can keep your stop loss at like that $8 million level and just let it ride with a less tight stop loss, right? And that is how you leg out, right? When you're trading, you take multiple take profit levels, right? You might take profits 3 different times to get out of your position, right? So that's my point. When you're messing with larger portfolios as well, right? You have to do it in the exact same way. Not only because that's a smart way to do it by locking in your gains and making sure that you have a certain guaranteed value locked in on your assets, but secondarily because say your Avalanche is worth, and this is in Wolfer Finance's case, say your Avalanche by itself is worth $2.5 million. You can't just sell $2.5 million on an exchange and get fair value for it, okay? We literally sold like 300, 400K worth of Crow one time, and we moved the market by like almost 10% with like 300K, having to liquidate that, right? So my point is that we're going to have to leg out of this either way. Okay, so you should take that into account whenever you are doing the same with your portfolio. Maybe not for the same reasons, right? Because you don't want to move the market. Say you've only got 50K. Yeah, you're not going to move the market with 50K. I get that, right? But for these assets, you got $1 million worth of that asset, $500,000 worth of that asset, $2 million worth of that asset. You absolutely can move the market with that if you liquidate it quickly. So if you liquidate it in intervals at prices that you are comfortable liquidating it at, then boom, you're good. That's kind of an exit strategy for the Wolfer portfolio that you can now take in turn and potentially model it into your portfolio, right? Secondarily, where do we go from there? Because if we reach market top and we get out at market top or thereabouts near it, I'm not trying to sell the top. I never care if I'm going to sell the exact top or not. Very few people actually get to sell the top, right? My point is that you lock in the profits on the way to the top, and maybe you do sell the top with 10% of your portfolio, but most likely you're not going to be able to time it and sell 100% of your portfolio at the top either, right? So especially if you've got like $6 million portfolio, $8 million portfolio, you're going to start moving market. It's not going to be good. You're not going to get fair value on that, right? So, and whenever we top, it's usually a blow off top, and then bam, it just gets tanked immediately, right? Like, you will know when the top is in on the market because it will retrace so friggin' fast it'll blow your mind, which is why you put stop losses there. Okay, so that's kind of my point. Now, Secondarily, where do we go from there, right? Where does Wolfer go from there, right? Because that's the whole point of what we're doing. We're trying to build a sustaining business that will continue to print income, continue to be able to do the things that we're doing for decades, right? So that I can hand it to my kids, so that you can hand it to your kids, things of that sort, right? And something that we can actually count on, okay? We're going to go into other asset classes until the bottom comes in, for us to go back into master and validator noting when it makes sense, because it makes no sense to hold it at the top and then ride it all the way back down to the bottom, right? Take your gains, pay out dividends to the people that deserve it, pay all of the what's it called, Stu? The buyback offers that people took, pay all that off, offer another buyback potentially as well to anybody that wants to just, be out and say, hey, I took my ride, I got my gains, peace. All right, cool. So you pay all the people, you pay off all buybacks, right? First and foremost. And then that's that. And then you go into other sustaining business models that are actually going to continue to make you money. And then what do? You don't put the whole portfolio into it, man. Like say you pay out a 50% dividend to everybody and everybody makes 50%. You're like, just immediately, right? There's multiple ways you can do that. You can do that over a couple of quarters. You can do that over multiple quarters. You can do it all in one lump sum, right? Just depends. From a tax purpose, I don't think it matters that much. I can talk to the tax accountants whenever it comes to that. My point is that if you pay that out, right? You pay out dividends, obviously, to investors. You pay out, if you do any buybacks, things of that sort, you pay all that off. Then what you do is you take what's left and you leave, 500, say you've got $2-3 million left on the sidelines after you, paid people a bunch of money, right? In profits, right? You would take, say you got 3 mil, right? You would take probably 1.5 mil or 2 mil and put it into assets, right? Or I would say probably at most 50%. You would take, 1.5 mil and put it into assets, and then you would leave 1.5 mil on the sidelines for other opportunities, right? Because say that the bear market bottom comes in real quick, right? You don't want to have all your money tied up in, other, business models and things of that sort that aren't necessarily super liquid. So we want to go into a mix of commercial and residential real estate, right? That's very simple. The real estate market is on a downward trajectory right now. It's a great time to buy. And it'll probably be even better time to buy by the time that we actually liquidate these. So it might be a really good timing on our end. But my point is that you don't just take everything that you got and throw it into there, right? You average it in, just like you would average out on your positions here. So my point is that what we will be considering doing is leaving, probably half of it as cash on the sidelines. And then whenever that income starts coming in from the other business models and assets that you are using or performing right now to generate income, maybe you put 50% of that on the sidelines in a war chest in anticipation of buying back assets like master and validator nodes whenever the bear market bottom comes in, right? And then you pay the other 50% out as recurring dividends, like whatever you make. So you make $500,000 in a quarter, right? You pay out $250,000 in dividends, and then boom, you keep the other $250,000 in the war chest for whenever, we do reach that bear market bottom, we buy back all those assets again. And now you have two business models, which is great, and an appreciating portfolio of assets that are consistently making you money, and the ability to still get back into the regular business model that you first started off with, right? So now you have a mixture of that, and you're building a conglomerate. Secondarily, say that, the next quarter you make $200,000. Okay, $100,000 dividend, $100,000 war chest, boom, right? And then you stack that up until we reach that bear market bottom. Bam, you buy it up, you start master and validator noting again, you rinse and repeat the process if it makes sense. Okay. So that's kind of my bias. I don't know what's happening with Burl Core, man. We'll get onto that really quick. I know I told people I would, but I think what I was just talking about was way more important than covering Burl Core, just to be honest with you. I covered it a little bit in the previous video as well. If you want to go and watch my live stream from last Friday, the Wolfer briefing, you can look it up. It always says Wolfer briefing, right? And it's always at the same time, 1 p.m. Eastern time. So if you want to look at that and see what I was talking about on Burl Core, great, go ahead. There is a law firm that's looking into them right now. That sucks. I didn't know about that until somebody tagged me in it in the Discord, and they are looking at boom. You know what I'm saying? So this is a good question, because if I'm not, then I can't do this. Whoops. What did I just do? My bad. I just took myself off of the screen. I don't know what happened just now. Ah, dude, your your question screwed up my whole stuff. Give me 1 second. Let me see if I can get my camera back on. What is going on? Oh, I accidentally put my thing above it. That's why that happened, because I put my thing above it. Because if I don't have the green screen behind me, I can't do this. I can't share anything, and it looks stupid. And I hate sharing my entire screen and stuff like that, because I can't watch the chat. I can't do anything in the way that I want to do it. So yeah, that was wild, bro. That was wild. But yeah, that's kind of my point. If you want to watch Burrow Core, watch what's happening with Burrow Core, go check out my previous video. Here's my bias. If they're asking you to sign an NDA as an investor to get information on what's going on, I wish that was a flag. Red flag, right? My bias is that, and this is just my opinion, and everybody can have their opinion. I'm entitled to it. You're entitled to it. My guess is that they know that law firm was looking into them. So that's why they're making people sign NDAs. Here's the thing, though. Those NDAs aren't going to mean squat. They're going to be pierced. If those people that sign the NDAs really want to go and talk to a law firm, they will. And there's nothing that Burrow Core can do. So the NDAs are just really just like a tool to scare people. In my opinion, NDAs are used to scare people a lot of times. I'm not saying that Burrow Core is doing that. I'm saying that's like generally what people do with NDAs. If you want to sign the NDA, hey man, that's on you. Dudes and dudettes, right? That's on you. I'm not personally signing an NDA. I don't sign NDAs. And especially for something like this, we'll see what happens. We'll see how it plays out. I hope they pull it off. What I do know is that they had a 90-day, if you signed a contract that said you wanted a refund, they had a 90-day thing. They didn't pay a single person anything. They haven't paid them any interest. They didn't give them any consideration. So those contracts mean diddly, right? Whenever you don't pay people a consideration. So say, for example, you're like offering people a refund agreement, hint, hint, right? And you're like, hey, we'll give you a full refund, but, we're going to pay you X amount of interest per year until we give you said full refund, a fair value on that capital. And then also we're going to give you a fair APR interest rate on that. And we're going to pay you that every 365 days, so long as we have the ability to pay that to you. You got to pay them, is my point. You got to at least pay them the interest, right? It's what's contractually obligated for you to do. So if you don't, they didn't even offer that, I don't think. They just said, oh, your interest will accrue. We're not going to pay you any, though. So what does that contract mean? It means nothing. So that's kind of my bias on Burrow Core. Do whatever you want to do. I'm not going to make a video on it. I don't think it's worth making a video on because, they're going to do what they're going to do. And I truly hope they pull it off. I'm pulling for them. I really hope that they pull it off for everybody's sake, because I know there's a lot of people that watch this channel. I know there's a lot of people in the Wolf for Discord. I know there's a lot of people in a lot of Discords that are invested in Burrow Core. And I hope that they pull it off for those people and they just get it done. So, that's really what it comes down to. So with all that being said, not to end on a terrible note, having to talk about that, but I hope everybody has a beautiful weekend, right? And a great hashtag Friday Pie Day with their beautiful families. I appreciate you for showing up. If you want to watch my live trades where I've taken $3,200 and turned it into over 11K in just the past 2 weeks, trading solely Bitcoin. And I think I traded a little bit of ETH. I might have taken a couple positions on ETH. Yeah. And you want to see the analysis and, my entries and exits on the trades, everything's live, everything's transparent. Feel free to subscribe to the channel and show up to those streams. We're streaming it almost every day. It takes me an hour to do. Pretty simple. And, literally, I think it was in between the stream yesterday and the stream today, we took $1,200 worth of gains, right? Just on very simple positions, very simple charting analysis, where I gave you the trades and gave you the setups, and we took it for gains. So if you want to watch that, go ahead and watch it. Make sure you hit the like button. Make sure you hit subscribe. Boom! Bang on the notification bell so that you know whenever we're going live. And I will see you in the next stream. Comment anything that you want in the relevant sections as per usual. Peace, everybody.